All right, so Woody, I'm going to kick it over to you for an intro and we'll get started.
Awesome. Thanks, Matt. Glad to be here. I'm Woody Clemmer. I'm the head of growth at ForMotiv. So I run sales and marketing. ForMotiv is a behavioral data analytics company. So we help insurance carriers understand the intent of their applicants and agents. We have a bunch of different solutions on top of that. I'm sure we'll sprinkle in today, but the end goal is to help create a better experience, convert more users while reducing risk and fraud. And Allison, I will hot potato over to you.
Sounds good. Good afternoon, everyone. My name is Allison Albrecht. I run our revenue operations organization here within Clearspeed. And similarly, as Woody was talking about, we'll probably talk more about Clearspeed as a product, but we leverage the power of voice to get to risk assessment in individuals through various processes, obviously insurance being one of them, and to illuminate and help move people through processes faster, get to workflow optimization, efficiency, and effectiveness while having a keen eye on understanding kind of what's happening around the fraudulent space, which kind of leads me into my first tee up and discussion point. And so, Woody, you and I have talked about this before. We did as you mentioned, bang up a presentation earlier this year on stage together, and we talked a lot about the way that the world is changing as it comes to just kind of generational differences. And insurance historically, while I like to view it as a risk-aware industry, not negatively in a risk-adverse industry, it's just an industry that understands and contemplates risks in every action, maybe tends to be viewed as a little bit we're slower to come to innovation or adapt to change, things like that. And oftentimes that's not true, but we do recognize that generationally we're seeing some change in how people behave. And that dynamic difference of what's happened for a generation, say like the baby boomer generation, which has been, kind of in the throes of the insurance industry for a while and been supplying the business there, is very different behaviorally than the way that it looks for Gen Z, Gen A, millennials. So I know you have some statistics around that and would love to hear kind of your thoughts and how you're seeing this play out and how that could have an impact in the climate of insurance.
Yeah, and before I kind of bore you with the statistics that I think are actually pretty interesting, just from a more of a macro perspective, and this is part of what Allison and I discussed earlier, is the shift has been to digital. The face-to-face agent retail environment that insurance, for many years, decades, that was primarily the way that they sold insurance. Now you have this whole digital transformation, this boom of online digital experiences, which has been fantastic. It's an awesome customer experience. It streamlines operations. It's quicker. Our whole generation loves instant decisions and we want everything fast and on demand. And what we've now started to learn is, and it's partly what both of our companies do, is especially with the data we have now, is there's just been this sort of hidden, not really talked about elephant in the room, which is it's also increased risk. And so for so long, you've had this seesaw of, okay, we want to make a better user experience, but the way you do that is removing friction. And friction is what helps protect you against risk. So you've got this inverse correlation. Go ahead.
I was just going to say, we call that the inelastic tension between
And
speed and
yeah, love it.
right? Like,
Exactly.
so get people through processes faster, but not at the expense of the accuracy components on the back end for sure.
Right. And so now what we're learning, especially in Allison, and we don't want to pick on the younger generations, but the data is interesting and it's something we're not sure if carriers are starting to think about. We know some of them are, but in the last decade, application integrity, so the honestness of the responses is down 25%. So there was a study Verisk did that they asked this question, is insurance fraud a crime? And they did it by age. And if you're 55 and older, nearly 100% said yes. It was, 96, 97%. The 18 to 44 range, only 70%. So nearly a third of people in that age cohort do not think insurance fraud is a crime. They asked a follow-up question, and this is fraud, a crime, right? The next question was, do you use deceptive tactics to lower your premium when you're applying for a policy? Baby boomers, 3%. Millennials, 40%. So nearly half of the millennials, and it's only getting worse if you look at the trajectory, nearly half are gaming the application process and saying, well, my premium went up 30%. You hiked it. It continues to go up every year. I didn't have a claim. And so I'm going to now remove a driver. Maybe my address is at my parents' house instead of in the city where I know it's going to be more expensive, or it's in a garage. I'm going to change my mileage. Maybe my teenage kid, who's a high risk driver is no longer on the policy. And so we've started to see all of these ways that people are gaming the system to lower their premium, and they don't think it's a big deal. They think it's your job as the carrier.
Self-underwriting,
Right.
right? Like they're taking an
Right.
opportunity to say, these are the things that we think are important to you, carrier, and actually you only need to know about them if I tell you, because I've told you what you really need to know about. I can handle the rest of that, or I can self-underwrite the rest of that. I think something Woody, you and I also talked about is just this kind of concept and idea that the younger generations very much view it as the organization, whomever they're dealing with, an insurance carrier, a banking institution, whatever, a company that they're buying goods from. It's their job to find the fault of the individual, right? If your process didn't ask me the right questions or didn't pull out the right information, that's on you. Like if you didn't ask me to provide enough detail, or if you believed me when I said this, then and you didn't follow up on it, that's kind of like you own that, right? Like there's a very strong difference between that. And I think that's evidenced by if you're anybody that maybe you yourself are watching TikTok on a regular basis, or you have family members of yours that are on TikTok and you hear about all these hacks. And some of them are like really cool stuff that I'm like, how have I lived all of my years of life and not figured that out yet? Like, those things I was today old when I figured out this cool thing. But some of those are actually like really not great things that people believe truly are hacks, and they're bank fraud. Like, here's how you go deposit this check and then withdraw it and still get the money anyway, which is a fraudulent activity that is, a fine crime, like, prisonable thing. So but the mentality is very much like, how do we get around the systems? And so when you have a generation that's looking to do that, and or generational gaps that are looking to do that, and also then won it yesterday, like, so I guess what do we do? Like, do we
No,
just sit back and go, ah,
it's a great point. And we also, so we delineate. Fraud is such a broad term, and we eventually, with all the stuff that we're doing around misrep and non-disclosure and leakage and rate evasion and gaming and things like that, we had to draw a line. And the line, at least for us, is fraud is I do not have a genuine intent of buying a policy. Like we have fraud where you'll have a bot go in. This was huge during COVID, but they'll go in and, an auto carrier will provide pre-fill information, which makes it easier for me as an applicant to get through the policy. And they were scraping the pre-fill and then using it for PPP loans and credit cards and unemployment and things like that. And so that became a huge issue. To us, that is fraud.
Mhm.
The other end of this coin is soft fraud, which is, have you smoked in the last 12 months? And you hesitate. I had a cigar at a wedding, or so yes. And then I see some drop down questions. And then I think, well, they told me that, I could get my policy in 20 minutes and there's no medical underwriting. So why am I telling them this? Maybe I Google it and realize it could be 400 or 4 times, 400, 500% more expensive. So smoker's amnesia. I go back and I forgot that I smoked and I press no. And we've seen now that's almost half. Almost half of smokers don't disclose during these digital underwriting experiences that they smoke. And so what are carriers left to do? Where the whole concept for them is we want to continue to improve this experience. And using that example, we don't want to have to do a blood test on everybody, right? We don't want to have to send a nurse to everybody's house. We want this concept of accelerated underwriting, which means you're trying to price it appropriately. But if, to your point earlier, Allison, and I thought that was cool when an underwriter said that, is these applicants are underwriting themselves. There's only so much price hiking that you can do before they start to shop around. So you get into this catch-22 where, great, we're now pricing appropriately, but if you'll see like Lexus comes out with these demand meter readings and shopping the last 3 years, every year it's a new all-time high. And why?
yeah, and
Well, I can tell you myself, when my premium goes up 23% and we've done nothing, of course I'm going to go, save 15% or more. If you buy over here, I'm going to go check it out. And so it's a challenge for carriers that I think they're just starting to get their hands around.
Yeah, and it's not, I think the good news, and hopefully if you're joining the webinar, it's because you're interested in learning how to come at this, how to solve for this, how to think about this differently, is that there are things we can do to help this that aren't going to degrade the customer experience, that aren't going to enforce massive hurdles, that are actually going to do quite the opposite. They're going to elevate the customer experience. They're going to bring forward additional folks into the queue in the workflow. They're going to expose blind spots. And all of this is important to contemplate. And so I think a lot of times we get kind of stuck in the cycle. And I know, Woody, you and I have spent a lot of time in this industry and a large part of our careers, and we kind of know it from all sides and angles, and can appreciate that it can feel overwhelming to hear some of this. It can feel like this is a really big thing that we need to go take on. Like, how are we going to fix a whole generational, vantage and viewpoint? And the answer is it's the first start in the change, right? So being part of something where you can see the innovation that we do have available to us and how do we bring that into the industry is the first step to do that. The first step to be in the transformative process. Transformative processes do not need to mean 5 years of a total overhaul upgrade. It can be incremental changes that lead to transformation. And so when we think about that, we're not incremental solutions. This isn't, we talk a lot about that at Clearspeed. Like we are a transformative solution, but you do not have to do it. That doesn't mean it's a massive disruption, right? You can do transformative things in pockets and still make a big difference. And so when we think about being able to combat things that I can't get with data that just sits out in an ecosystem from a third party, I can't get from asking directly to the folks without understanding kind of something behind that. So if it's in the confines of the smoking example, right? If I can ask directly something like, or obviously with Clearspeed, where we would ask the questions directly in that moment and understand if that individual has risk associated with that. Now I can confidently move that person through the process and keep them on an accelerated path, probably quicker than the 20 minutes that I had originally thought, because I'm able to address the questions in real time. And those that aren't go through a normal process and have the appropriate follow-up. And so it can feel overwhelming, I think, when we talk about these things, but there is a recognition that we have to, as an industry, get to this spot where we are moving to take this on. It will expose, and there will be advantages taken, and there will be a point in time where taking additional rate will not be sufficient, will not solve for the problems, will start to expose some larger keeping operational inefficiencies. And so I don't know if you've thought about like other ways to kind of think about this holistically, Woody, but outside of, just kind of attacking it generationally, like what are some other tactics or things that you're seeing around what we see in like either soft fraud behaviors or behavioral pieces that might be different than what we intuitively think of as hard fraud?
So, and I think to your point, it's like the first step towards recovery is admitting you have a problem. And I think for the carriers, like when we were first starting out, so much of like when we were trying to pitch and do different things like that, we would say, we're capturing this, we call it digital body language, but basically like how users actually physically fill out the digital applications. And that was what we were trying to sell was you're not capturing digital body language, and when you're in face to face, an agent or an underwriter can read and react to an applicant's body language. It's the way that we communicate, voice, eye contact, body language, et cetera. It's a huge part of communication. You're missing that online. And as we've evolved, what we've realized is like no one's waking up in the middle of the night going, man, I wish I could analyze keystroke behavior, right? But
Maybe you are.
well, yeah, we are because we're nerds like that. But really what they're saying is our loss ratio needs to improve. And how do we do that? And so we have completely flipped how we frame it and saying your problem isn't the body language. That's just how we solve the problem. The problem is P&C. It's like an auto insurance. I think it's $35 billion problem a year. And the way that they're currently solving is you try with third-party data checks and they can be incomplete, they're expensive, et cetera. There's only so much you can do. And so what we have started to do, and the good news is it's for a couple of years ago, it was not like a head in the sand, but to your point, it was like we have bigger challenges. We have bigger fish to fry right now. We need to actually migrate to the cloud or move to digital. We need to get those things stood up. And now they are. And now they're saying, okay, what's next? What can we do to enhance this? And so one of the ways that we do this is again, we analyze how somebody is filling out the application. And then we're looking for these behavioral risks, essentially. Are they changing answers? Are they seeing a quote, going back, editing information, like undisclosed youthful drivers is huge right now in the auto space. In the life space, it's all around smoking, BMI, alcohol, like the heavy hitter, the high impact questions that impact the premium. How somebody behaves during the application, both for customers and agents, is highly indicative of their intent. And I think to your point, it can be scary when you're saying, well, we've just put all this emphasis and investment to make the experience better. And if we're thinking about that inverse, well, great. Now do we have to, like what happened 2 years ago, carriers started just turning off the ability to buy online. And our whole thesis is you can't do that. If the toothpaste is out, you can't then just turn it off. Netflix can't go back to selling, mailing you DVDs because they
Waiting
can't
for
figure
that
out password
DVD.
sharing.
Right.
It's so what do you do? And so to us, it's the same thing you guys are doing. But if you're going to make these real-time instant decisions, you need real-time instant data. And so what we're able to do is say, I'll use this life insurance example because I just think it clicks for people. But we don't want to do a blood test and a cotinine test and have to do this experience of heavy, full underwriting for everybody. But we also, picking out of a hat is only getting it right, 8 out of 100 times. And so what do we do? And we'll say, well, when we fire these 3 risk signals, there's a 45% chance that that person's misrepresenting themselves on that particular question. And so it's 5 or 6 times better than picking out of a hat. That's who you should do the manual intervention on. Or the same thing on the P&C side would be, the whole concept is if you can understand the intent of the applicant, you can have the experience adapted to the individual. So you don't have one static experience for everybody. You're actually starting to tailor it, in these little incremental, to your point, like 1 inch at a time. And it's not some crazy hocus pocus, like moving app, Harry Potter, moving picture thing. It just could be simple little things where maybe the customer gets moved to a technical error screen and has to call into an agent or a call center if they're showing signs of misrepresenting a risk. Or maybe in the background, you're doing an additional data check, or you're later in the flow asking the question in a slightly different way and seeing if you can elicit a similar response. But I know it's the same thing. I think it's why, we've A, gotten along, but B, our companies are aligned and partnered to say, how do you figure out who are the right people to add friction to while eliminating friction for everybody else? And if you can find that, that's the holy grail, is do it individually, do it through pockets, find the riskiest people that are going to hurt the book the most. And those are the ones that you should be spending your time on, not doing it for everybody or just up pricing everybody.
Yeah, and we talk a lot about infusing trust back into an ecosystem that has frankly lost a little bit of that. Whether that's from company to policyholder, or whether that's, from policyholder through back to the company. Like there is a kind of the way that our processes are geared are largely built on distrust. We are asking, validating, revalidating, asking again, not believing the answer that we're receiving. And so we go ask an additional data source for another backup answer to confirm. And we've taken the position that instead of doing all of that, you can actually ask the person directly, with the Clearspeed solution, one-to-one in the moment, and understand what you're working with. And so you have a real-time evaluation of that individual that you can trust. And so instead of walking everyone through a lot of things and a lot of steps to make sure you have the right things, you start at the very front end of that with those individuals. You ask that question, those individuals you can trust, and then you elevate their customer experience. And so there's an encouragement to almost rethink how we think about the process, like flip it on its head. Instead of, positioning processes that are built fundamentally on distrust or are built on validating what I'm being told, ask the question, receive the response, know you can trust and believe the answer, and then supplement with some additional sources that might be necessary to round out additional areas, but not to validate and get to trust. And so you lean into, we are leading with trust. We are asking you, we believe you, we trust you. Like that's the principle of it. And so I like to say that there's, a cohort of people that are going to enter your ecosystem, whether they're coming in through an underwriting or a claims workflow or whatever workflow you're doing, and you know that there's a subset of those individuals, let's just call, say, an 80-20 rule. 20% of them might have something you'd like to further understand. There's risk associated with them. It might be something you want to double click on. It could potentially be a very real hard fraud thing. It could be a mild thing that you want to just uncover more. And there's 80% of those people, the vast majority of those people, that everything is as they say it is accurate, it's genuine, and you can believe them, but you don't know that when they start. And so they all have to walk through to the very end. Instead of doing that, flip it on its head and say, hey, from the very beginning, I'm going to know who that is. Like, I'm giving you the secret decoder ring, right? You get to illuminate that from the onset and elevate the experience of those individuals. And so much of our world is in this kind of like toggle of like whether it's insurance or broader of, we lean into, we kind of almost assume incorrectly. Like it's very much turned the narrative to like you are guilty until proven innocent. And so we're trying to flip the narrative around to we're leaning into trust. We can get to that trust. Obviously, we talk about that getting to trust faster, but it's more important than just like that concept. It's the reality of that and what that does back in your experiences and how that allows your customers to lean into you. And so when we think about all of the work that we're trying to do to improve the process, and yes, we absolutely care about taking points off of loss ratios and combined ratios and driving down expense ratios, and that is all meaningful because that means that you can provide back. It's really fundamentally about how do we keep an industry that is there for a very critical purpose. Like the principle of insurance is meeting people at their worst moments and providing for them. And how can you elevate that experience and how can you continue to do that so that when there are worst moments for people, you are there to provide for them? And so leaning into things that come into the market that are new, that are innovative, that aren't even sometimes new and innovative, but are a different way to think about things is the benefit of the whole. Like we get that benefit then through the whole ecosystem. And so
Yep.
these are things that I think, we tend to think a lot of in other areas, right? We like it's you don't kind of go into, other areas of industry. Oh, that feels like a little new. Maybe we should wait like a while for like that new phone to come out. We kind of like adapt in that space. And so consumers are prepared for that. They're ready for that. And they want to embrace this. And I think leaning into that and pulling forward some of this can, again, elevate that customer experience as well.
Yeah. And I think so we use the term confidence a lot is, when you're a carrier, it's being confident in the ultimate underwriting decision that you're making. We are an intelligence tool, as are you guys, to be able to make you feel more confident saying, yes, this person should be accelerated or given an instant decision, and we feel good about binding that policy. We don't think that the idea, again, is let's just add friction. Let's become a friction tool. It's all about that, finding the, fine tuning it and finding the fine line between genuine and maybe this one deserves a little bit more
By
qualification.
principle, normally 80% of folks are there. Like we're not trying to disrupt, we're trying to actually
Exactly. The
that.
vast majority. So don't worry about them as much, but also it's all about saving carriers time, underwriters time, improving some of the stuff that they're already doing from a modeling and a risk perspective or a conversion perspective, and saying, if we can automate this and we can work within whatever the flow is that you already have and whatever interventions you already have, and work, could be considered a triaging tool, uh, we can help you guys make that decision. And Allison, I don't know if you want to give just like a 2-second plug on what Clearspeed does. I just saw one of the questions popped up and I thought,
Oh, hey, I sure would love to
I
do
know,
that.
there you go. I'll give you the
Thank
alley
you.
oop.
Thank you, Woody. We deliver automated questionnaires. We ask 2 to 4 direct questions, yes or no responses. And based on that short snippet of that response, we evaluate risk. And so we illuminate for you if that individual, and we ask those direct questions. So Woody brought forward an example that I'll pull a string on. He was talking about the smoking example in life insurance. So a question that's commonly asked in applications today, we would ask directly through the automated questionnaire. We would say, have you smoked cigarettes in the last 30 days? We would expect that answer to be no. Someone answers no. We evaluate that response and illuminate for you if that response contained risk. If that response does not contain risk, you can confidently pass them through the ecosystem, move them down the accelerated path, expedite their workflow, get them to issuing. If that response presents risk, that's just an indicator for you that something might need further review. That person is likely a great candidate to maybe move through your normal process, which might include an additional screening that you would typically do for individuals around nicotine, et cetera. And so we're able to, again, one-to-one in the moment, evaluate very direct, specific questions associated with whatever part of the process you're looking at. And we leverage that power of voice and we are unique. There's nothing like our technology in the market. And so this is something that I think a lot of folks that we've been working with have been quick and eager to unpack and learn more about. And so it's also fun to bring that to your customers and do something that is unique and different in elevating that customer experience. So
Yeah, awesome. Cool. Thank you. Wanted to make sure you got your shine there for a second. And I don't know if there was anything else. I know there's a couple questions in here. We could probably answer maybe one or two with the time we have
yeah.
left. What do you think is driving the evolving outlook on what fraud is across the generations? What do you think?
I think, yeah. So I think the question maybe is geared towards like why? Why do we see baby boomers feel very, very confident about a component of I trust, or I say what I say, and that is the answer. And we see less of that. I don't mean to like completely slam. To be transparent, I'm a millennial, so like I'm kind of falling into this, but high end of the millennials, all right, but I'm still there. But falling into that bucket. But I think like I do have kids that are in this Gen A generation, and I do see this, and I think I mentioned this before. I think there's a couple things at play. Woody mentioned a lot more of our transactions and interactions are digital. And so there is less of a beholdenness of behavior to say, I owe it to somebody very personally to answer this question. I think baby boomer generation was, categorically a lot of the business was done in more of a face-to-face environment, whether that was, directly with an agent or over the phone. And like the digital component was not as prominent in the experiences. And so I think when you add this kind of capability, just as much as people can be super loud and opinionated on X or Twitter, whatever you're calling it, but face to face, they're not going to say anything to you. Like there is a little bit of an element of I'm not accountable for things. And so I do think that's driving at some of these pieces without totally psychoanalyzing younger generations. I do think that has a lot to do with that activity. And yet, again, at the same time, you can't completely ignore that mechanism. That is the mechanism that people do want to interact with. And so you need to be able to bring it forward, but you need to feel confident as a carrier that you've done your due diligence to ensure that you can deliver that beautiful customer experience, that expedited customer experience without sacrificing the components that could be taken advantage of. And we're telling you, there's a way to do that. Good news. It doesn't have to be one or the other. We have a way to approach that and do that very well and effectively, better than it looks today.
Yeah, I think we would probably need another 30 minutes to fully unpack the younger generations and how they're feeling right now. And it's a tough world out there, but I think that, certainly to me, it comes from like my own experience of why did my rate just go up so much? I drive this car and that car, and we've been good drivers, and I don't have a high mileage. And why did my premium just jump 25%? No claims, no this, no that. And so I'm going to shop around, and maybe on the next one, maybe I am, futzing with some stuff and realizing, well, I work from home. My mileage, I had 10,000. Maybe if I put 2,500 or 5,000, maybe my premium will be a little bit lower. And I know it's not rated in most places, but as a customer, I probably don't know that. So, I think a lot of that comes into play. It's just sort of the state of the world right now. But that's for another topic. That's for our podcast, Allison.
That's right. That's right. We're one very excited that people attended and showed up and to talk about this topic. There's a lot of thoughts around this. There's a lot more to unpack, but I think it's there is a I think we're beholden as an industry to continue to deliver again that product that meets people in some of their worst moments and in their times of need. And we're also beholden to do it very effectively and well, and you can. And so there's an ability to do that. And I think I take that very seriously as someone who spent a lot of time in this industry, as like our ask is to, I don't love the bristling when people find out I'm in insurance and they have things to say, right? Like how do we bring back a very like trusted relationship? And I think it's on all of us to do our part to do that. And there are very efficient and effective ways to do that. And at the end of the day, it really brings back that experience and starts to hopefully move the needle on some of those metrics that we're seeing and moves it the other direction because we've taken the right approach to balance that out. And so, no matter if we want to,
Awesome. I don't know what.
yeah,
Thanks, Woody and Allison. We're at the time, and there is some questions that were still out there, so I'll make sure that you guys get those over email and we can respond to the folks. But I want to just say thank you for joining us today, and thank you for everybody that attended. We will send out the recording so you have that as well. So have a great rest of your day, and thanks again. Cheers, everybody.
Awesome. See you guys. Thank you.